Gogri joins us, chairman of Aarti Pharma, and let's connect with him to talk about how things have transpired for the quarter gone by. You've guided for a 10 to 12% EBITDA growth in FY25 for the first 9 months. Growth is 18.8%. So will you reverse your guidance, or will Q4 be soft 24% margins quarter, and are they sustainable? And what will be your margin guidance?
Yeah, basically we are seeing good momentum of growth, and we will be having a current quarter which will be a relatively better quarter than Q1 and Q2. The Q4 will be better than that, and we are hopeful that it is to be seen whether we are able to beat the Q3 numbers or not. But the team is trying, and it all depends on, at the end of the day, how much is the sales which is moving out of the factory eventually, so that we get these profits booked on our books. Overall, I think we see a good growth potential in overall business, particularly CDMO, CMO business. For the next year also, we have a good order book, and we see overall xanthine business, CDMO, CMO business, as well as the API business, all three businesses growing considerably. So we will be coming out with the revised guidance post annual numbers, and we will be able to guide the 1 year and 3 year numbers in month of post final results, Q4 results.
Rashesh, your company has also planned to strengthen your API as well as CDMO segments, right? Many API players are now facing growth pressure. What is going to be your strategy when it comes to both APIs and the CDMO business as well?
Yeah, in terms of API businesses, the company is present in niche API segment. So we are present in steroidal segment, and we are also present in anti-cancer segment, along with anti-hypertensive and CNS segment. And these segments are lifestyle drugs as well as the anti-cancer and steroidal, all chronic diseases and anti-cancer. So they have limited supply availability in the current marketplace, and overall the pressure on us from the competition is not as severe as general anti-infective medicine or any other anti-pain management medicine like that. So and we are also going to see a lot of patent expiries coming in next 3 years, and company has already partnered with several generic players to offer our product in the marketplace. So with that, we will be seeing good growth. We have also added considerable capacities, and we are further adding additional lines to make sure that we are able to capitalize on this growth of expiries in future. Whereas in CDMO, CMO, we have invested in a new facility which is going to start in Q1 of next financial year, and with that we will be adding 450 KL capacity of reactor volume, and with that with the new projects going, coming to the market from the innovators, we will be able to give them higher volumes, and with that, we will be able to see considerable growth in the future.
Good morning, Mr. Gogri. This is Shell also joining the conversation. I'm sorry if I actually missed the part about your margin guidance, because 24% is what you logged in this quarter. Any guidance, or you mean that on the whole you will revise your guidance later?
Yeah, we will revise the guidance. I think, basically we on the top line is dependent more on the finished product and the raw material prices. And generally, we give growth guidance on EBITDA or profit before tax. And that is what we will revise for the next financial year. Currently, I think we are operating at a gross margin level and EBITDA level close to 20 to 24% range. And I think that is a range that we will continue for the time being. If in particular quarter we see more CDMO projects, and then that gives us a bump. And as we have guided in our analyst call also, that in the last quarter we will have large CDMO, CMO sales happening. And with that, we are hopeful that that number will remain higher.
Right. I wanted to understand about the commercialization of the Aarti project that was earlier expected in Q4 of this financial year. Now it has actually been delayed to actually first quarter of the next financial year. Any reason behind this? And also, if you could help us understand what does this sort of a plant mean when you talk about your revenues?
Yeah, basically this project normally takes 2.5 years to come, and this year we saw a lot of rains in particular region where we have put up the plant, which forced us to the civil activities which were going on in that region got delayed, and that's why we are delayed the project by 1 quarter. However, overall the commercialization also will take some time. It was not going to commercialize in the next quarter only. So the commercialization and all the approvals were anyway going to take 9 months to 12 months. And then only, significant commercial activity can be started in that facility. Overall, I think we have a very large land parcel available, and currently we are just only putting one block with 450 KL capacity. Once we have more, order visibility, then we are able to put additional such 8 to 10 blocks. So we have large capacity there, and those blocks with the brownfield can come up within a year. So overall, we can see significant top line and EBITDA growth coming from this, and we will be able to meet our customers' requirement from this new site for CDMO CMO segment.
I just wanted to understand from you, actually, sir, wanted to understand about your promoters. In the last 2 quarters, the promoters have actually sold about 1.8% stake. What's the reason behind this? Should we read too much between the lines? What's your take?
Certain set of promoters wanted to, rebalance the portfolio. However, I see that 44 to 46% is not a major change, and we continue to hold reasonable stake at promoter level. So we don't foresee any issue on the overall stake front.
Then, from promoter side?
Pardon?
So no more stake sales are planned on the promoter side, right?
Yeah, yes.
All right. So the street can actually take that sort of a cue.
Yes.
All right. I just want to understand lastly about your capex exactly. What's your capex plans that you have apart from the other plans that we just spoke about, and also what sort of revenue contribution will you see in from those?
Yeah, see, we have also announced the capex of our xanthine-based products, and we are going to invest close to 150 crores, and where we are going to increase our capacity of xanthine products from 5,000 metric ton to 9,000 metric ton per annum. And with that, we will have a global size which will be equivalent to any Chinese player. And with the current scenario with the Trump administration coming in US, I think that is going to play out very well. And all this expansion is brownfield expansion. With this brownfield expansion, we will be able to see a quick we will be able to fill that capacity very quickly. We are hopeful. And the other strategy that we have done is that we have also, done regulated filings from this Therapy Unit 3, which we have. So we will be able to offer our caffeine and other products for the regulatory market. So with that coming in, overall, I think margin profile from this xanthine will also improve. Overall, I think we are seeing good top line growth. I think I don't want to dwell on the numbers. Overall, I think we will give the proper guidance at end of Q4.
We will connect with you. Hopefully, you will be able to give us a number then, Mr. Gogri, when you talk about your profit guidance and also your brand new financial year where you see it. But thank you so much for joining us on ET Now, for being candid, for actually talking about the earnings gone by for Aarti Pharmalabs and where you see it headed from here on. So that was the management of Aarti Pharmalabs on